Unlocking your financial story, the power of financial statements. Want to take control of your financial future? It all starts with understanding your financial statements. These documents are like your financial GPS, providing a clear picture of your current financial health and guiding you towards your goals. Whether you're an investor, a business owner, or just looking to manage your personal finances better, financial statements are your roadmap to success. Think of it like this. You wouldn't drive a car without knowing how to read a map, right? Financial statements are your map to the world of money. They tell you where you are, where you've been, and where you can go. Don't be intimidated by the fancy terms or numbers. We're going to break down each statement in simple terms, using everyday examples you can relate to. By the end of this guide, you'll have the confidence to read and understand these essential financial tools, empowering you to make smarter decisions with your money. So buckle up and let's get started on this journey to financial literacy. The balance sheet is like a snapshot of your financial health at a specific point in time. It shows what you own, assets, what you owe, liabilities, and what's left over, equity. Imagine it as a scale. One side holds your assets, the other side holds your liabilities, and the difference between the two is your equity. Here's a breakdown. Assets. These are things you own that have value. Think of your house, car, savings account, or even investments. Liabilities. These are debts or obligations you owe to others. This could be your mortgage, car loan, credit card debt, or student loans. Equity. This represents your ownership stake in your assets, or how much of your assets are truly yours after subtracting liabilities. The balance sheet follows a simple equation. Assets equals liabilities plus equity. This equation must always balance, hence the name balance sheet. Understanding your balance sheet helps you assess your financial strength, identify areas for improvement, and track your progress over time. It's a fundamental tool for making informed financial decisions.
The income statement, also known as the profit and loss statement, tracks your financial performance over a period of time, like a month, quarter, or year. It shows how much money you earned, revenue, and how much you spent, expenses, during that period. Here's the basic formula. Revenue. This is the income your business generates from its operations. For example, if you own a bakery, your revenue would be the money you make from selling cakes, bread, and pastries. Expenses. These are the costs incurred to generate revenue. For the bakery, expenses would include the cost of ingredients, rent, utilities, and employee wages. Net income. This is the bottom line, your profit or loss. It's calculated by subtracting total expenses from total revenue. The income statement helps you analyze your profitability, identify areas where you can cut costs, and track your financial progress over time. It's an essential tool for making informed business decisions.
The cash flow statement tracks the movement of cash, both into and out of your business during a specific period. It provides a clear picture of your cash inflows, cash coming in, and cash outflows, cash going out. This statement is divided into three main categories. Operating activities. This section reflects cash flow from your core business operations, the everyday activities of buying and selling goods or services. Investing activities. This section covers cash flow related to your investments, such as buying or selling property, equipment, or securities. Financing activities. This section tracks cash flow from financing your business, such as issuing stock, taking out loans, or repaying debt. The cash flow statement is crucial because it shows you whether your business is generating enough cash to cover its expenses, invest in growth opportunities, and repay its debts. It's a vital tool for managing your cash flow and ensuring your business's long-term sustainability.
Section 5. The Statement of Changes in Equity. Understanding ownership and earnings. The Statement of Changes in Equity shows how the equity section of your balance sheet has changed over a period of time. It tracks the movements in your ownership structure and retained earnings, providing a detailed view of how your business's equity has evolved. This statement typically includes share capital. This represents the amount of money invested in the business by its owners through the issuance of shares. Retained earnings. This is the portion of your net income that's reinvested back into the business rather than distributed to shareholders as dividends. Comprehensive income. This includes all changes in equity during a period, including net income and other comprehensive income items that are not recorded on the income statement. The statement of changes in equity helps you understand how your business's ownership structure and earnings are changing over time. It's a valuable tool for tracking your business's growth and making informed decisions about reinvesting profits or distributing dividends.
Section 6. The power of financial statements. Making informed decisions. Financial statements are incredibly powerful tools for making informed decisions about your money. They offer a wealth of information that can help you assess your financial health. By analyzing your balance sheet, you can assess your financial strength, identify areas for improvement, and track your progress over time. Measure your financial performance. The income statement allows you to track your profitability, identify areas where you can cut costs, and measure your financial progress. Manage your cash flow. The cash flow statement helps you understand where your cash is coming from and going to, enabling you to manage your cash flow effectively and ensure your financial stability. Track ownership and earnings. The statement of changes in equity provides insights into your business's ownership structure and how your earnings are being used. By understanding and analyzing these statements, you can make informed decisions about investing, financing, and operating your business, or managing your personal finances.
Section 7. Key financial ratios. Unlocking deeper insights. Financial ratios provide a powerful way to analyze and interpret financial statements. These ratios compare different line items within a financial statement or across multiple statements, offering deeper insights into your financial health and performance. Here are some key financial ratios. Liquidity ratios. These ratios measure your ability to meet your short-term financial obligations, such as paying off current liabilities. Examples include the current ratio and the quick ratio. Profitability ratios. These ratios measure your ability to generate profits from your operations. Examples include the gross profit margin, operating profit margin, and net profit margin. Leverage ratios. These ratios measure your reliance on debt financing. They indicate how much debt you're using to fund your assets and operations. Examples include the debt-to-equity ratio and the debt-to-asset ratio. Efficiency ratios. These ratios measure how efficiently you're using your assets to generate revenue. Examples include the inventory turnover ratio and the asset turnover ratio. By calculating and analyzing these ratios, you can gain a deeper understanding of your financial strengths and weaknesses, identify areas for improvement, and benchmark your performance against industry averages.
Section 8. Conclusion. Financial literacy. Your key to success. Understanding financial statements is essential for anyone who wants to take control of their financial future. These documents provide a clear picture of your financial health, performance, and cash flow, empowering you to make informed decisions about your money. Remember, the balance sheet shows what you own, what you owe, and your equity. The income statement tracks your revenue, expenses, and net income. The cash flow statement monitors your cash inflows and outflows. The statement of changes in equity details changes in your ownership structure and earnings. By mastering these financial tools and utilizing key financial ratios, you can unlock deeper insights into your finances, identify areas for improvement, and make smarter decisions that lead to financial success. Don't let financial jargon intimidate you. Take the time to learn and understand, and you'll be well on your way to achieving your financial goals.